Our fourth panel discussion based on AI and ML Propels, the next digital transformation. For this, I would first like to invite our moderator on stage, please. Mr. Sushil Thakur, Director Technology Consulting, Financial Services Advisory, EY India. Welcome, sir. I would now like to invite our panelists on stage, please. Ms. Poonam Vijay Thakkar, Mentor of Change, NITI Ayog, Top Brand Management Voice, LinkedIn. Mr. Smitesh Shah, CTO, Ambit Finvest. Mr. Samir Mohanty, COO and CTO, Avanse Financial Services. Ms. Mandakini Kumari, Chief Product Officer, Vivriti Capital. And Mr. Mathew Panat, Chief Technology Officer, HDB Financial Services. Ladies and gentlemen, let's have a huge round of applause for all our wonderful panelists. Sushil sir, over to you.
Thank you. Hello, can you hear me? Yes. All right. And take a seat.
So just on a lighter note, it's not HBD, it is HDB.
Sorry, sir? HDB.
It's HDB.
All right. Good afternoon, everyone, and good afternoon, our esteemed panelists. Our topic for discussion today is something which is quite interesting. AI and ML propelling the next wave of digital transformation. We all have been experiencing AI and ML in some shape and form, be it our personal or professional life. But what we are going to discuss today is some of the emerging trends, what are the business opportunities, and what are some of the challenges that come across with that opportunity. So without taking much time, I think our panelists are introduced to you already. I will start with our conversation. And my first question to Poonam is, financial services have been in the forefront of digital transformation. We have seen digital economy, or what the media report says, that digital economy growth is almost double the rate of our overall economy for the country. So with that in a view, do you see with the AI and ML based technologies and the emerging trends around this, bringing a quantitative continuum to this growth, or there is going to be a qualitative shift as we move along and as this technology matures?
Thank you so much, Sushil.
Sure.
And happy to be on this panel today. And that's a very elaborate question. I don't know how I will justify my answer in the time given. We are in let me just put a little pretext to what I'm trying to talk about with respect to the qualitative or quantitative. The pretext from digital India would be that we are at the cusp of something which is phenomenal happening in our own country. We are no more just the India, but we are the digital India. This is a country that is boasting of the highest human resources in the world, which is, we are talking about 1.4 billion people, and out of this, 1 billion people are under the age of 35. This shows about the adoption of digital things that can happen at a pace, at a scale, which is possible in a country like this. And average age is around 29 years. So coming to the question that you asked me, from digital transformation point of view, I think the country is very much ready to do things that are required to be done at this point in time. From this perspective, let me give you an example. I think in boardrooms, we usually have this debate. What should be our investment when it comes to qualitative? What should be our investment when it comes to quantitative with respect to research, deployment, and then understanding analytics and data, where we can make sense for our customers on the products and services that we are trying to define. From that perspective, a quick example would be, why would you like to, I can see a lot of beautiful trees here. That's how my example is coming out. You won't cut the roots if you want a beautiful tree to go up. So your quantitative is nothing but, take an example of a building where you are building the building up, you have so many floors, and you are scaling up your business. The scale is possible when AI, ML becomes a part of your business. Because humanly, there is only so much we can do, and that acceptance has happened in the country, in all the businesses. So AI, ML, as we speak, is a part of our businesses. It was a part of our businesses in the last few decades. This is nothing new. Because of COVID and post-COVID, we have started talking about it. As we speak, you know, the top 5 or top 10 giants in the world are actually talking about quantum computing. So this is very, very unprecedented times for all of us. The qualitative from product and services and customers' point of view would be that you have a skyscraper now, but how do you implement things that make my life better when I'm inside that building? For example, do you have voice calling in the lift? Do you have air control, which can happen? So to a customer base, quantitative would be plugging in AI, ML with the facilities that can make a customer's life easy. From a product point of view, it would be AI chatbots. It could be better learning of me, what I need, when I need. It could be understanding me, my financials better, and throwing a product to me or a service to me when I need. I think that is the answer. So qualitative and quantitative being the roots of the tree, and then you taking it up will have to coexist and exist in a phenomenal way by using AI, ML to the next level.
Thanks, Poonam. So just to summarize, it appears that it's not a debate of qualitative versus quantitative. They will probably continue to propel jointly, and we will continue to see the phenomenal transformation that we have been kind of witnessing. Thank you. My next question to Samir. What we have been observing and kind of reading is in AI investment in fintech is expected to reach about $26 to $27 billion by 2026. There has been a CAGR of almost 23 to 24%. Now, with such a huge AI-driven disruption that we have already been experiencing and witnessing, do you see the challengers and the established players that we have growing in competition or collaboration, or it's going to be, again, kind of the two coexisting with each other?
Thanks, Sushil, for the question. Can you hear me?
Yes.
Yeah. That's a very good question, and I think I'm going to break the myth with one data point which I read somewhere in the HBR. And they were comparing Fortune 500 companies in 1995 to Fortune 500 companies in 2020. And one starking data that came out was the companies that existed in 2020 are only 250 or 260. And then when they researched which are these companies which have taken the slot which was existing in 1995, it is actually the companies which are lying below 500 in the 1995 list. And there were only 17 new companies we got into the Fortune 500 list of 2020. The two messages here, okay? AI and ML has come in, has created disruptions. But what it has done also, it's also enabled the large corporations to think internally. They have also reinvented their business model. They've started solving their unique business problems using AI, ML. And certainly the data shows they've not gone out of it. They've actually, bounced back with a lot of confidence and a lot of scale, because they've, as Poonam called out, what my fellow panelists called out, the foundation is already there. So they've rediscovered themselves, okay? Large corporations. Now, to answer your questions, the disruptors, yes, disruptors will come. There are many disruptors who have come, and I think over a period of time, you will have disruptions coming from both the sides. The real comfort zone for everybody is, I think, wherever there is opportunities, the large enterprises are always going to collaborate. Because what AI/ML is doing today is, it is actually increasing our collaborative ecosystem. today. Your reach, your extendability is going up by using AML and collaborating with the disruptors. So in my view, there are going to be two things that's going to happen. Companies are going to look at internally and how they can transform themselves, and which data there's enough data to prove this. And the second thing is large corporations are definitely going to collaborate with the disruptors and make the most of it. And that's what my view is, and I think there is enough data to prove this point of view. I hope that answers the question.
Thanks, Samir. So definitely the disruptors are kind of bringing the culture of thinking and then kind of innovating differently for the established players. At the same time, it also brings the opportunity to collaborate.
I think one last point I want to add is there's a growing need of large corporations to change the mindset. I think for you to imbibe these kind of technologies, you need to review the way you run your org structures. You need to reprioritize the way you look at businesses, customer journeys. So there's a lot of internal thinking that the organizations have started doing it, and that's the need of the hour when the disruptors have come into the market.
Thank you. Thank you, Samir. So with that, I go to Smitesh. Now, we did talk about AI/ML based technologies and the kind of disruption that has been kind of witnessed. Now, what kind of change would you kind of suggest should be made about innovation in these established players, a kind of ecosystem, to leverage this AI/ML based technology positively and ensure that they align with the overall kind of large strategic objectives for the organization?
Thanks for being me on the panel. See, AI/ML is a buzzword, and as Poonam rightly mentioned, it has been there for ages. People were doing in Excel. Now we are automating it. So I think with AI/ML, the largest use case has been in the financial services industry. And I come from Ambit Finvest, which is in the MSME lending. So the unsecured lending, the way we have structured is first you put up a clear goals of what you want to achieve, set up the objectives of how we are going to achieve. And I think you need to have a right pool of AI talent with you. Apart from that, you need to ensure that you experiment, learn, reinvent, and do change management. But it has its own challenges when you have this. There are three critical points which you need to put in place: is ethical, sustainability, and security. Because with all of this, it has its own challenges which comes in. So if you look, what we have done at our company level is we clearly chart out what we want to achieve using the AI/ML feature. Was that we wanted to do the unsecured underwriting, not linearly increase our credit and enabling function teams with the sales team. So today we have been able to put the scorecard in place. We started with the expert judgment scorecard, and then now we have moved to AML-based scorecard. So there is a continuous learning which happens. As the data gets enriched, it will learn itself. But on the overall platform, we hear a lot about ChatGPT, ethics and all. So I think in the overall framework, you need to have ethics, sustainability, and I would say security. Hope I answered.
Thank you, Smitesh. I think that brings me to the next question to Mathew, and it's pertaining to probably the ethics and transparency and confusion that probably is still going around. So according to a recent survey, Mathew, 73% of business say AI is critical to their success. Yet 41% of the technologists are concerned about the ethics of AI tools. 47% of business leaders are concerned about even the transparency. What are your comments on this?
So good evening, everybody. And very interesting question. And rarely I'm given a contra subject or a contra topic. And so one of the things, and we are at an NBFC conference, right? So the regulator, when they give us a license, what they call us is a regulated entity. What that means is we have some fiduciary responsibility when it comes to handling our customers' data. Now, if you look at things, there are a lot of buzzwords that are happening in the AI/ML space. There's supervised learning, unsupervised learning, right? Lots of things happening in this. And but key thing is, ChatGPT is like a buzzword right now. But in a recent Senate hearing, I think Sam Altman submitted that companies like ChatGPT or the AI/ML-based technologies need supervision. And there's a reason for that, right? how is a AI/ML model built? It's not like what you saw in Mission Impossible, the recent one, where a machine is learning and learning and learning, right? I mean, you have somebody coaching that models. How do you ensure that the biases don't come into that? So these are key. So it's good to be enamored by a lot of things, but it has to be in the right balance. You don't want a machine doing things which it believes is the right thing to do. Maybe it's not the right thing, because I always refer to this clause which the regulator tells us, it's just not enough to follow the letter, but to actually follow it in spirit, right? The intent of the letter is more important. So the machine cannot get these kind of human aspects in that whole thing. Does that mean that we should throw away AML? The answer is no. There are merits in it. Actually, before this particular panel conversation, I was having a conversation with Samir here on video KYC and how his thought process is that a machine can do the KYC part of things and not have a human being talk to that gentleman or that person who's undergoing a KYC. And I was thinking, what if there are two AI engines? The customer is also putting an AI engine on that side. Now, which AI model breaks first would be an interesting thing, right? It's commoditized right now. You have ChatGPT, you have Bard, and you can do brilliant things, but you can use it for the wrong purposes as well. So there has to be controls in place, but do not throw away the baby with the wash water. That's what it's about.
Thank you, Mathew. So that balancing and control mechanism is of importance all the time. Mandakini, the question that I bring to you is pertaining to the ESG aspect, environmental, social governance aspect of AI/ML. According to a research, and I will take one example, one LLM model may involve carbon emission, which is equivalent to 550 cars emitting carbon in a year. And we can do extrapolation for other complex models with this base parameter. Now, what are some of the ways? So on one hand, we talk about some of these emerging technologies, then we also say that digital is going to have positive impact from ESG perspective. On the other hand, data gives kind of a different picture. So how do we address, or what are some of the ways to address this ESG aspect for AI/ML?
Sure, it's a great question. So if you know, like initially we used to go with in-house infrastructure, dedicated data center. We can solve this with going on the cloud. Like these days, we go on the cloud, AWS, Azure, or Google, which will reduce the emission because if we have a dedicated data center, each NBFC or each banking has their own data center, and of course that do the emission. And seeing how our economic is growing, number of car, number of IoT device will increase. If that's the increasing, again, it will increase the technology. And if we are going on the cloud, it helps, it's win-win, and it helps a lot. We see a lot of restrictions on the regulatory and especially in the finance sector. But again, we got some liberal now for few cases where we can use the cloud. And we are right now going towards cloud, which is add-on in terms of ESG. It's it's giving the value addition from the ESG front. And scalable, it's scalable for AI, ML, doing the machine learning. So it's adding more and more value and scalable for the long term.
Okay. Thank you, Mandakini. I will have next set of questions, and maybe in the interest of time, if we have to stop somewhere, we'll see to it. So my next question, again, I will come to Poonam, is I think most of our eminent panelists have been associated with the MSME sector. So how do you see the rise of AI being leveraged to the MSME sector, that have been kind of underserved or unserved from their credit requirements perspective?
That's a great question, I believe. I would say, again, I'll go back to the root, the example which is playing up in my head. MSMEs are nothing but the base of our country. That sector has to actually grow because all the large corporations are also looking at the rural India, which is underserved, unserved, and needs to be served. This is the time to serve them. So look at the phenomenal numbers that MSMEs are posing today. We are talking about close to 60, the last data that I could see is 65 million MSMEs in India.
Yeah.
That's the customer base or the target audience that you have to serve. How do you serve them? What is it that you're not able to serve from a service provider point of view? How do we understand the major factor is credit worthiness. I think that's where everything is starting. Products can be organized and can be created, innovation can happen. But how do you understand or how do you evaluate whether you can extend the service to them or no? So the gate crasher or gatekeeper is creditworthiness. AI can play a fantastic role there and add to it the layer of ML. When the combination of AI, which is learning from the past data, and ML can be put together, you can actually organize data which is not what is used by the corporations in a standard way, the traditional method. You need to have, today you can understand creditworthiness from a person who is MSME, what is their e-com transactions that they're doing, what is their social media activity, what kind of holidays they are taking. Cash on delivery is still a part of our system, right? So everything is not linked to your bank accounts. So alternate method of creditworthiness using AI and ML can really be a game changer. And large corporations are definitely looking at this as a part. MSME needs that push today, reason being it employs close to 100 million people in our country. That's the employment MSME sector is giving. So imagine if they are able to, all the initiatives at the government level also, which let me talk about the Startup India. Let me talk about the startup incubation centers, where the government is actually taking a lot of deep steps into ensuring that the new age people, the youngsters, are getting into startups, and entrepreneurship is a part of our country today, right? It's there in the DNA. But how do you feel that? Everybody will look for. There is a Shark Tank India that is enabling investment, but at what scale and what level? So MSME as a sector, you have a deep dive here. There is a Shark Tank that is talking about millions and millions to be given, looking at what you have done in your sales numbers and EBITDAs and your sales revenues already established businesses. And then there is a segment which is very different from this. So how do you get into this pool of 65 million people who are looking for that easy credit to come to them? So AI, ML can possibly play the biggest role in identifying these benchmarks and parameters and matrix of success for them to go for easy loans. I'll give you an example of collaboration that I can think of here. I think there is a Gujarat-based company called LenDenClub, which is doing phenomenally well. There are P2P models that are coming up in this business segment. And how the traditional businesses will continue making money and establish their business, and the new age fintech companies that are already evolving, a great mix, a great marriage has to happen, where you have something which is a ready platform, and there is a large base, large corporation which is ready with customer base. You marry both of them together to fuel the next level of success that has to come from MSMEs. This is...
Thank you.
Thanks.
So Samir, my next question to you is, we have seen a lot of transformation in the payment industry, a lot of digital transformation, India stack, and so on and so forth. Now, this AI/ML-based technology that we have been talking about, what do you see as the next wave of transformation in payments and repayments?
Yeah, so I think for a lending or for the NBFC space or for the company where I belong to, where most of our customers are lent based on their future employability potential. When we fund a student, there's nothing in the bureau that I can read and say, hey, this is the right student to lend. And as Poonam rightly called out, all our analytics is based on alternate data. If you have to really underwrite a student, you can't underwrite based on parents' bureau. Then you're not doing education loan, you're doing a LAP or a personal loan. So the challenge before us, how do you underwrite a student using alternate data? And then you can go as deep as the unemployment rates of US where students are going. The university in Detroit where the student is employed. Okay, the average per capita income where there's been a trend in the per capita income. What can you earn at the end on passing out? What can you earn at the age of 40? And what we have done, and that's our biggest takeaways in the area of free payments. Okay, we have two challenges. One is when you reach out to the student, they are in a zone where we cannot connect. And second is we operate out of 17 branches, but we fund students out of 380 locations. So this is where I think analytics led by AI and ML has solved the way, and thanks to COVID. I mean, COVID has given us a lot of distress, but I think COVID has also germinated a lot of thought in people's mind and how can you reimagine your business. And that's where we started thinking about collections. Because where to collect on the ground and where to go and collect in the restrictions that we have. And I think our journey on analytics and AML started with collections, not with acquisitions. Because that was the problem we had to solve. And today, with using AML, we don't call the customers. We use all alternate algorithms to reach out to the customer. We actually know the customer who pays on 25th of the month, 26th of the month, at what point in time he pays. And all that we are using is interactive bots. First of all, there is a model which tells me which are the set of customers who are very likely to bounce. So just to give you a data point of the entire database today, 15% of the population I am able to pinpoint, which is giving us 75% of the bounce. So our work is cut out on 2nd of the month. Where do we have to reach out to this set of customers? And then our travel plans, everything gets charted out because some are routed through contact center, some are routed through field. And this has all been enabled through the collection analytics, and which is where I think AI/ML has played a tremendous role. And we have seen the benefits, and we'll continue to use AI/ML at least on the side of collections, because for an NBFC, lending is pretty simple. Getting the last money bit in is the most difficult job. So for us, I think repayments and payments have really enabled us. We are enabled on all modes, Bharat Bill Pay, any payment mode we are enabled. We've created a platform which gives a single source of truth for all the collections that hits the company. So I think, and moving ahead, I see this space evolving with the kind of offering UPI is bringing in. I think the payments and repayments are going to, the EMI management landscape is going to completely change as far as financial institutions and lending is concerned. And I must acknowledge this one area that we need to definitely acknowledge is regulators. They are also enabling you to do most of these things. And if you see the regulations that come out, one, it is definitely customer-centric. Second thing, it is driven towards innovation.
Yeah.
So these are the couple of enablers, and repayments and collections are going to be the real game changer, and AI/ML is going to play a large role in this.
Thank you. So Mathew, I think as a follow-up to this question, how do you see with these emerging trends in collection and risk management, defining the charter and the next course of action for the traditional way of doing the collection risk management?
So HDB is a unique NBFC in that sense, right? I mean, the way the products that we do for lending is right from small tickets, including microfinance, consumer durables, to things such as commercial vehicles, construction equipment. So the spread of products that we go into the market is different. Obviously, that means the velocity and the volumes are also different. And it's very unique to each of those things, right? So the way we look at things is, what's the holy grail that we are trying to achieve? We are trying to take the customers that the banks would not lend to, right? Lend them at the highest interest rate, because IRR matters at the end of it. Ensure that we get maximum, I would say the charges, right? And finally, ensuring that it doesn't get into the collections bucket, because then it becomes an expensive proposition, right? So even before we get into collections, what we want to do is that the credit appraisal process is so clean and watertight, in that sense that only very minuscule of them actually go into the 30+ bucket, as we call it. And that's the key to ensuring that the cost per transaction and finally the cost of credit is kept to the minimal possible. Now, the way we are looking at things is in microfinance and consumer durables, typically these loans do not go beyond 1 year.
Yeah.
Right. Whereas in the construction equipment, loan against property, and other loan products, typically on an average, it's 1+ year. I mean, it goes up to 3-4 years as well. So where do we put in a machine-based credit decisioning engine, which is what we have done in the consumer durables and in those areas, where the velocity and the volumes at which we take in loan applications and sanction against them has to be a fast process where human beings are not involved. So it has to be all the way to disbursement of the loan, fully automated. So straight through processing is key with the lowest risk that we are taking. That's important. Whereas something like, for example, a construction equipment, you give a loan for a JCB. I mean, it's a relationship-driven engagement. You get repeat business from that same customer who typically is doing something in a coal mine somewhere in Bihar. Now, recovery of that machine, and something interesting that we've learned along the way, right? I mean, we lent for JCB machine loans, and what we realized is these machines are supposed to be used in India, but they're actually being exported to Africa. Now, if I have to recover this asset, I can't.
Yeah.
Right? So there's a process flaw. Now, no amount of AI/ML is going to help me in this. How do I'll always be one step behind what the crooks are doing right now. So it has to have some level of human intelligence. I mean, we work continuously with the government. In this case, we had to work with the customs department and tell them that if there is a machine that's hypothecated in India, before sending it abroad or allowing for the export, you need to take the consent from the lien originator. So these are certain things that we learn along the way. And obviously, these learnings go into the system and it becomes an automated process at the end of it. So collections, yeah, I mean, this is the way we're looking at things where we can use technology, specifically AI/ML, to help us out here.
Thank you. Mandakini, I have next question for you. So with so much of proliferation and so many options for the customer in terms of NBFCs, what role will AI/ML or does AI/ML play in terms of delivering excellent customer service? I think that's an area that probably we did not touch upon. So your comments on this?
Sure. So as right now we discuss lot of pro and cons we have with technology, and we should take the decision, conscious decision that what we should do, what we should not do, what kind of product we should build for what segment. So like for the customer-centric product, we can categorize customers in 3 parts. One is who is not tech savvy. So we can define some technology for the members who are not, customer who are not tech savvy. Second is between. And third one is too much tech savvy, say Gen Z, new generation. For new generation, they would like to go always self-service. And we have to provide technology as much as to them. For example, like robo-advisor. So these 30, like as Poonam rightly said, that most of the Indian age of between 30 to 40. So those, they need self-service, and we should give, like they are earning in age of between 30 to 40. You have a major time you have to spending with friends, family, office. So you have to spend 15 to 16 hours over there. Now, saving is also, that's the point, you have to save for your future. So now technology or AI/ML should be built in such a way, I'm earning 1 lakh, it should, system knows a lot of score me or multiple product available in the market, which read what's my earning. They read bank statement and all. Now, they know what is my expenses. Let's create portfolio where it says, okay, this is your income, this is your expenses, 1 lakh income, 50,000 expenses. Don't keep in saving account, build the, give me a lot of, where should I invest this money? Create nice portfolio, peer comparison, using AI ML, and so that I will start saving. I don't have time right now. So that is one product lot of product like that we can build. Alipay has smile and do the payment, even though you don't need to swipe the card. So those people who are not technically enabled, we should build a product like that for them. Of course, Google Pay is the segment where between tech-savvy people, not too much, but not too less. Chatbot for like EMI payment, repayment and all. So there are multiple, we should think product in different way for different categories, segment, age group, sector, asset class, and of course, as rightly said, collection is the key thing. So it should be 360 view of the customer and get more and more data from the customer, and what is the behavior, and build the product accordingly. So that's my view. It's not a one size fit for all.
Okay, I think in all our conversation, that point has been coming along quite strongly. I have the last
Sushil,
question.
Sorry, I'll plug in here. Usually we don't smile when we pay, we smile when we get. So this will also change behavior, you know. People will start smiling when they are paying, right?
Thank you. So I have the last question for Smitesh. This is on, again, the ethical aspect. There have been different schools of thought. One such thought has been the takeover of human work by AI/ML. Now, what is your thought as kind of the AI/ML evolution continues and kind of digital transformation, next wave of digital transformation kind of keeps evolving?
So I'll put it in 5 parts. One, again, as I mentioned, ethics, transparency, control, privacy, and accountability. We have to take all these 5 critical parameters into account, because when you are talking of AI/ML, a lot of data is being used. Do we really have the right to use this data? We are just chatting while we are in the room that a lot of unknown data are being done. So we have to bring in accountability, because today AI/ML algorithms are black box. It gives output. So ethics, transparency, control, that is what would be very critical to ensure that as we move along, everything is good and everything is bad. But how you utilize AI to the betterment of the MSME sector, which is the backbone of the country where our company works, I think that will be very critical to ensure that we work in this direction. As we go along, things will keep on evolving. Bad will happen, good will happen. I think there was one use case where somebody asked to chatbot to show the picture of how the person will look 20 years down the line. Now, if the chatbot has been given data on a biased basis, then it will show the outcome in a very critical biased basis. So how it can be made unbiased by the critical learning of the data points, that would be very critical for the future of AI/ML.
Thank you. Thank you, Smitesh. I know I'm already running over time. So basically, just to summarize, the way this is coming out is there's no one size fit all, your words. There always has to be a balancing act. Regulator has been kind of an enabler in adoption and then taking it to the next level. And I think the most important thing is it's not eating into kind of, one is not eating into someone else's sector and the market. It's on its own creating new market segments, underserved, unserved. I think we talked in the context of MSME. And I think that balancing act is what we are going to kind of continue to see in the foreseeable future. So thank you very much. I think you have been wonderful in terms of sharing your thought. And thank you, audience, for your kind of patient listening and being a wonderful listener. Thank you very much.
Well, thank you so much for such a wonderful discussion. Can I please request you to remain on stage for a few more moments? And now to felicitate our wonderful panelists, once again, I would like to request Mr. Manoj Agarwal to please come on stage.
Thank you. I think management do a better job.
Thank you for keeping us interested throughout the panel discussion. Ladies and gentlemen, let's have a huge round of applause for our panelists, please. Please don't go anywhere. We have a very interesting quiz coming up. Can we please have a group picture? If you could step forward.